Hi, Jeannie. Great to have you today. So I'm Steven, the founder and CEO of Paytime, and I have Jeanniey Walden with us today. Hi, Jeannie.
Hi, how are you?
I'm good, and you?
Wonderful. Very excited to be
Great.
reconnected.
Yes, no, I'm looking really forward to chatting with you today. So, just as a bit of background, Jeannie is a business and marketing executive who transforms businesses and industries. She's currently the host and executive producer of a national syndicated TV show called Liftoff with Jeanniey Walden. Jeannie is also the chief marketing officer of Rite Aid and leads their thrifty ice cream business. And most importantly, prior to that, a role within TV and Rite Aid, she was the chief innovation and marketing officer of DailyPay in America, where she helped create not only the brand, but also a demand and awareness for what's called on-demand pay or earned wage access throughout the United States of America. Now, DailyPay is actually now the largest on-demand pay provider. So thanks, Jeannie, for coming on today.
Absolutely.
Jeannie, I'll start off with just a couple of questions, and one we want to know, and really our chat today is just try and educate and inform the Australian market around what and how earned wage access or on-demand pay has evolved in America. It's been around for many years now in the American market, and in Australia, it's still pretty new. So, from what you've seen there, is how big is the market in the US, and what factors have been driving this uptake in this great financial well-being solution, specifically amongst companies?
Sure. So, gosh, earned wage access really started in the US probably back in, you'll find some companies that claim it started back in the late 2016,
Yep.
but it really probably started in 2018. Those were very, very early days, similar to, I think, what you've been experiencing most recently. Today,
Yes.
though, I would venture to say that if you look across all businesses that are doing B2B earned wage access going
Yes.
through companies, you're probably looking by the end of the year at a billion-dollar opportunity. I mean, it's become
Wow.
extremely large.
Wow.
Yeah,
Great.
yeah.
Um, and what type of companies, specifically industry, size, characteristics, are taking this up? And maybe if you can just mention a couple of global brands in particular.
Sure. And so it's also evolved because I know you're looking for some information for an industry that's still emerging where you are.
Mm.
And so what I'll say is when earned wage access or on-demand pay was first emerging in the United States, it was industries that had call centers, uh, nursing centers or home health care workers, and fast food restaurants. So really places that had a lot of hourly workers with a lot of turnover. And that's
Right.
really how the industry started. So,
Yes.
you could look at call centers globally, you could look at any of these industries globally. I mean, home health care networks, even before COVID, were really, really, running understaffed, and fast food companies were as well, and so were call centers. So understaffed hourly employer markets. In today's world, because of where we are with the economy, because of what's happening with unemployment rates, and because just the cost of everything is getting so much more expensive, you see earned wage access being popular in any industry that has hourly workers, whether it's retail, still, call centers, fast food companies, hotels, companies like Hilton Hotels is a company that offers DailyPay, as a matter of fact, to their organization. And they're looking, at least last I talked to them, which was a while ago, they were moving into different countries. Their
Yes.
country managers were expecting it to manage their staff. But you also see other companies that are probably, well known even in Australia that are using it along the lines of McDonald's, Taco Bell, Pizza Hut, any companies that are in the fast food space, any home healthcare companies, and so many different call centers. But, earned wage access is not just being used by hourly employees. In many companies, it's starting to be picked up for the hourly or the salaried workers as well. And these are, early stage managers all the way up through vice presidents of companies. It's not as popular in those salaried roles yet, but it is something that the entire company is using. Other companies that are using it, are warehouse companies, delivery entities. Amazon built their own earned wage access program. Uber built their own earned wage access program. So you do see it literally anywhere somebody, in an hourly role has a job. And the need for it continues to expand.
Great. And as you said, starting to pick up in the salaried workers, companies too. Do you think that's mainly because the world is really, seeing everything as an on-demand society? The only thing people really wait for is their salary or wages.
Yeah.
Why not have your
You
pay
get
in real time when you need it?
Yeah, you're getting two factors that are colliding right now, and you're getting the on-demand everything person, right? Millennials and Gen Z who are now in the workplace, and they don't wait for anything. Everything's becoming on demand, so why not pay? And
Yes.
along with the cost of inflation and the cost of goods and the cost of groceries
Good.
being so high that, if you look at any studies that are done by any of the earned wage access companies in the US or any of the research companies that are out there, I mean, it's common now that about 40 to 60% of people run out of money in between paychecks. And when you're in a situation where you make enough money, but payday's not until the following Thursday, it's
Yeah.
not a great place to be. And turning to credit cards when the interest rates were low wasn't a big deal. Turning to a credit card now or a line of credit or any kind of loan, even and especially the short loans, becomes very expensive with the high interest rates. So a
Yes.
lot of people
Yes.
find on-demand pay as something that just can help them in cases of large expenses. And
Yes.
that's one of the ways that DailyPay became popular. It's one of the ways that all earned wage access became popular for the user, because they would have an unexpected expense. Primarily, it's usually medical. Somebody has to have a root canal, which is very expensive, or somebody's child gets sick or gets hurt or needs a specialty medicine that's not covered by any insurance plan. Or
Yes.
your air conditioner breaks, your heater breaks, your car breaks down, and without your car you can't get to work. If you don't go to work, then you lose your job. So there's a cycle of these unexpected expenses that really are the types of issues that come up for any worker across any company. And these people typically go to HR, and they typically go to their HR leaders and say, hey, can I get an advance on my pay? Can I get a loan? Can I take money out from my retirement company? What else can I do? And that's why, especially in the US, starting conversations with the HR team is a great place to start to really show not just that you're providing a great solution for their employees, but for the understaffed HR teams who take on more and more responsibilities. On-demand pay and earned wage access usually help to eliminate a lot of the problems that they have to deal with in their everyday life.
Yes, definitely. So, I mean, based on that, would be correct in saying that it actually doesn't matter if a person is getting paid weekly, fortnightly, or monthly, because we've obviously got 3 cycles. It really is just, a situation in their lives. Obviously, if they are getting paid weekly, they would potentially use it less. But are you seeing that across all different pay cycles where companies are adopting it?
Yeah, so interestingly, gosh, I've been gone from DailyPay for almost a year and still say we. When I worked at DailyPay, we used to see companies that paid their employees weekly, especially temporary staffing companies.
Yes.
And that didn't change the demand at all. The demand was still there because if
Wow.
you have an emergency, it doesn't matter when you're getting paid, unless it's tomorrow, you need your money for that emergency. The bi-weekly payments, obviously, were kind of standard in the US. Monthly payments were interesting because what we saw were for monthly payments in the US, companies like Amazon pay monthly in the US. There was no difference. For companies in the UK that have where the entire society is being paid monthly,
Yes.
there tends to be a different way where you're raised differently with the expectation that you're only going to have access to the funds once a month. And from all of the earned wage access providers in the UK that I've spoken with, the demand really isn't as high from the consumers. When they have an unexpected expense, they tend to already have a backup because that's just the way that they've been brought up, and the
Yeah.
entire society is that way.
That's very
Versus the
interesting because Australia, we've obviously looked in terms of pay cycles and the breakdown of percentages. We pretty much mirror America in terms of that
yeah.
weekly, fortnightly, and monthly. So that's, yeah, interesting. And what are the benefits that employers are seeing in terms of their retention or productivity and engagement? And then if there are those benefits that have been shown, which we know there are, why do you think there are that the company is seeing out of it, not just their employee?
Yeah, so, again, in the early days, I think one of the things that was most interesting for HR people when we first reached out to them was the ability to reduce turnover. And many companies have in the US, earned wage access companies have a turnover reduction calculator on their website. DailyPay used to
Yes,
have one. I haven't looked recently, so I don't know if they still
we've
do.
got one.
But yeah, it's a a simple calculation, but it first of all shows a financial benefit. So, especially in the US, turnover rates are over 100%. If you have 100 workers and you're losing 20 a week, within 5 weeks, you've turned over 100% of your people. So it wasn't uncommon for DailyPay to see companies that were battling a 100% plus turnover rate, even if you weren't, even if you're battling 60 to 70 to 80% turnover rates, the cost to replace that person is very high because you've got the cost of recruiting to find another person. You've got the time where that job doesn't have anybody in it. So you may possibly be paying overtime to a
Yes.
manager who has to cover because there's no employee there to do the work. Or you might be paying a premium rate for somebody else to cover that spot until you get it.
Yeah.
Then the person starts, and there's always a period of onboarding, no matter what job you're in. So
Yes.
you've got anywhere between 3 weeks to 3 months for that person to get up to the same level of productivity. So, when
Yes.
you factor all of those in and you look at the cost of replacing somebody, and then you can say, I can reduce your turnover by 10%. 10% of the dollars tend to be very high. I'll never forget, I just recently started at DailyPay, and one of the clients, said we had helped them reduce their turnover by 15%. And I said, oh, great. This company had about 50,000 employees. And I said, how much money does that save? And they said, it saves us $12 million a year, which is a
Wow.
number that I did not believe at
Yeah.
all. And
Yeah.
I said, do you mean over 5 years? And they said, no, that's what it is annually. And when you sat down and broke out the numbers of the recruiting fees that they didn't have to pay, the onboarding fees, the overtime, it really was significant. And I think that in the early days, a lot of companies didn't realize the impact that that was going to have on their bottom line. Now, what I will tell you is in the early days of DailyPay and Pay Active and Even and everybody in the US that was starting out around that same time, it was pre-COVID. No employees did not have the upper hand in looking for a job. It was difficult to get hired. So you wanted to hold on to your job for as long as possible. So turnover was still bad, but it wasn't as drastic as it got for a while there. So, companies were more focused on a great customer experience and not so much trying to do something financially to keep people there. So on-demand pay wasn't a solution that was top of mind. So being able to go in and just say, hey, we're saving you money, that really wasn't it. We had to go in and talk about this is something that your employees need.
Yes.
And by the way, it will help save you money. So it's a double edge in the beginning. And I would say, piece of advice as you're looking to position how you're offering earned wage access is to look at what are the problems that are facing businesses now. And what we
Yes.
know about all businesses today are they're all trying to cut costs.
Yeah.
So a turnover
Yes.
calculator that shows this is how much we can help you save is great because you're speaking right to their problems. HR teams traditionally are understaffed, so they're all looking at eliminating as much work as possible so they can focus on other work that's waiting in the wings. So
Yes.
being able to say that this will reduce the number of inquiries they get in between pay periods in a positive way is also very helpful. And then you look at the employee side of things. Back in the early days, employees had never heard of something called earned wage access, so they didn't really
Yes.
trust it. They thought it was a loan, a payday loan,
Correct.
and everybody hears payday loans and they think predatory. So depending on what it's like where you are today, from a consumer perspective, getting a secondary set of messaging out that reaches the consumer that just talks about this is a offering that you can trust. This is something that will help you. This is not predatory,
Yes.
really, really makes a difference, because what you want to make sure is when a new client comes on board, that you get a high percentage of employees that use the service.
Yeah. Brilliant. Thank you. So, and what, Jeannie, when you talk to C-suites, and let's, putting aside the HR person, CEO, CFO, what do you say to those that say something to the effect of, giving employees real-time access to their pay is just going to result in abuse. They're going to chase their tails forever. They're going to go spend all their money before payday on drugs and alcohol. It's just, another means for them to spend beyond their means. How, what is that answer to that, and what are the stats or the reality out there show?
Yeah. So, I mean, there are people who are going to do that if they have access to their money. Those are people that are going to do it anyway. And out of all the HR leaders that I've spoken to over the years, and some are still, good friends of mine, that's what they would say to their C-suite and their boards, to say, we already have a group of employees that don't show up for work because they've got money issues. They're stealing money out of the cash register to support their drug issues, that we already know. And the statistic that I heard from an HR person a few years ago was, you can assume that 3% of your employees are always going to have challenges like that. And
Wow.
that's just assumed with any solution, not just earned wage access.
Yes.
So I think, my advice to you would be, you've got to have throughout the organization a champion.
Yes.
Traditionally, you start with an HR champion who can advise on what the concerns or issues will be with the rest of the entity. And across the board, what I can tell you is the legal and compliance team always want to make sure that this is not predatory, that it's legally compliant. So the HR person can let you know how serious and concerned they will be to appropriately address those concerns. The CFO always finds it hard to believe that there's a solution out there that seems like a miracle, and there's nothing that it has to be too good to be true. So the HR person can usually talk about, what does the CFO need to see? Do they need to see the turnover calculator building out the modeling behind the scenes to show that this is how it's going to play out over time? Do they need to see that, a reduction in complaints or requests to the HR team for money before payday will make the HR team more productive? Like, what is it that you need to present to the CFO financially? The CEO and the board, you're going to find CEOs and board members that will generally expect or say what you just said, that
Yeah.
this is going to be something that people abuse. And, that's where client testimonials come into play. That's where the HR person, as your champion inside the organization, can come into play. In many cases, I know, I've done I've offered pilot programs to companies in the past to test it
Yeah.
out and showcase that it will work for very large entities and organizations. So, I mean, it really is different. One HR person that I worked with built out a set of slides called A Day in the Life of an Hourly Employee and interviewed 10 hourly employees and actually, documented. They get up at 4 o'clock in the morning to take care of their kids until 7 to come into work. They don't even eat because they don't have enough money so that they can leave. And if something happens along the way, even but just by 10 minutes, then they have to call a babysitter and now they have to work overtime. And, it really showcases how challenging somebody's life is so that it turns into, a great solution where, the board and the CEO can see that this is something that helps. I mean, I've often found because of my just PR propensity and background and marketing background that oftentimes if you can get press to create those stories through trade publications to talk about here's how we help this customer and do some client surveys with employees that talk about, without this, I wouldn't have been able to do this or that, and showcase those testimonials to the CEOs and the board, that tends to help. It's also great to have some really good just business testimonials that business leaders and CEOs can say, yes, I've been using them and it's fantastic.
And would you say there's enough evidence in the American market now and enough data out there to prove that this viewpoint is really a myth and it doesn't make people worse off?
Yeah, 100%. But I will tell you the thing that was the most helpful for the entire US market, unfortunately, was COVID. And I say that because when COVID came and everybody stopped working and many companies had to cut their staff, many companies had to give pay cuts, on-demand pay became the only lifeblood for companies to keep their employees and keep them engaged. And those concerns had to be set on the back burner for a while. But as a result, you saw companies besides Hilton, you saw, Kroger grocery stores, you saw Dick's Sporting Goods, Tractor Supply, you saw just very large entities and trusted, reputable organizations in the US using the service with nothing but amazing positive things to say, and that kind of quelled the fears for the majority of people. And we haven't seen it return, at least not through the time that I was with DailyPay. Occasionally, you still get somebody who just doesn't believe in it, but that happens with everything.
Everything. Offering the solution, how does it help employees stand out from their competitors? One hand, so when they're competing in the market for new employees, when they trying to attract them, and how does it become a key attraction tool on demand pay or earned wage access?
Yeah, so I would say in the early days, DailyPay did a study that was publicly available that said the results showed that if two companies were offering the same base salary, just say $10 an hour for easy math, I know that's not what it is anymore, but and a person had a choice to leave their job at $10 an hour and go work somewhere else for $11 an hour, or stay where they were and make $10.50 but get access to their pay on demand, the survey results showed overwhelmingly people would stay if they could just get access to their money. And that was in the early days. Fast forward into, not too long ago, it tended to be something that people look for when they're applying for a job. In fact, some of the recruiting websites will actually, if you go to Indeed.com and you type in the phrase on-demand pay in quotes, it will actually show you jobs where in a lot of the requisitions, it says, we offer on-demand pay or same-day pay. And so whether it's DailyPay or another company, advertising that you have that as a benefit of joining, just like health benefits or paid time off or remote working, it's kind of become the norm. Yeah, it's becoming the norm. But
Yeah.
definitely, for a lot of businesses, it is still a differentiator in highly
Yeah.
competitive businesses like home healthcare,
Yeah.
where everybody pays the same amount of money, so
Yes.
you've got to stand out in benefits as a way. So.
Yeah, and then retaining those staff so that they don't jump around from one company to the next. Yeah.
Mhm.
Yeah. Um, in terms of implementation process and time, uh, how, in terms of the heavy lifting for companies or employers, is it fairly straightforward? Does it require a lot of implementation time and months of work, like rolling out a new payroll or time and attendance software? Um, or, is it fairly straightforward and all the heavy lifting is essentially done by providers like DailyPay and Paytime?
Yeah, I would say, depending on what solution you're working with, the timing varies quite a bit. From a DailyPay perspective, DailyPay spent the time upfront in its very early days to integrate with the ADP's platforms of the world, or other platforms, time and attendance, so that they could make it extremely simple. So if you were running a certain program that DailyPay was already integrated with, it was a very simple, easy implementation that required no additional tech work or very little tech work. You were already sending your files into the payroll company, into the time and attendance, into the benefit systems. So DailyPay just gathered information from those three systems. Other companies, even on the B2C side of the house, maybe like an Earnin or a Dave, avoided those altogether, the integrations altogether, by just saying, when an employee comes to our website, we'll have them put their corporate email in, or where they work. We'll do a validation to make sure that they actually work there, and based on that, we'll give them access to money. So it runs the gamut from being straightforward. A lot of the payroll companies integrated or built their own systems with Ceridian and their Ceridian wallet. That they chose the route of not, originally were partnered with people in the on-demand pay space, and then chose to build their own platform. So as a Ceridian customer, there's just a button that you turn on as an HR manager, so it's just automatically available for you. And that is key. I mean, with any business, forget about earned wage access. When you need to get IT resources from the client side to do any type of integration, you're battling the entire company's
Yes.
strategic priorities, and that's pretty impossible to do.
Yeah. Key to keep it simple. Take it away.
For
Yeah.
sure.
And finally, Jeannie, what learnings would you say from the US market around earned wage access, on-demand pay? Would you like to, could you give to Australian C-suite CEOs, CFOs, HR, etc., today, where you see the market and where EWA has evolved to, in terms of, what should C-suites expect in the Australian market going forward, both pros and cons?
Yeah, I think from a pro standpoint, I liken it to email marketing that's been around
Wow.
for seemingly forever. In the early days of email marketing, nobody knew what it was. Everybody was used to doing direct mail, and companies had to start to embrace email as a new technology, wrap their arms around it, appreciate how it works, and figure out how it works with their company and their marketing programs. It's the same thing with earned wage access. It is not something that is possibly happening. It is the way that people are going to get paid in the future. Even in the United States, the federal government is working on on-demand pay access for government payments and Social Security payments.
Wow.
And they've been doing a lot of work behind the scenes with the banks and the Rails platform. And if you look at a lot of US banks, they will also offer, early access to your wages with your paychecks. A lot of the neobanks have their own types of programs that are built. A lot of traditional banks in the US are now saying, hey, you've been getting your pay with us for a number of years. We know that you work for this company. If payday's on Friday, but you need some money on Wednesday, we'll give you it's a simple bet for them. Nobody's really tied it all together with the banks and the payroll companies just yet, but I mean, this is the way that people expect to get paid. It's the way that, people get paid for all their creator jobs. It's the way that, they get paid for driving delivery services, by, doing any type of Uber, or even, babysitting. I mean, most of the hourly workers are doing jobs that pay them immediately. So why would they expect anything different from their employer? The pros of it are, it's here, it's coming, you can embrace it and enjoy the savings and figure out how it helps your company be positioned to be a great place to work, to support your employees, to offer something that they really can find value in. On the con side of it, it is a commitment that takes a little bit of time to set up and just have a structure with, and you've got to be very careful about the company you partner with, because once you give somebody access to their pay early, if that provider is not a great provider, or you've got issues, it's extremely difficult to switch providers or to pull it out and say, we're not going to do this anymore, without it looking like you're taking something very valued away from the employee base. So, you got to make a smart choice up front, and do the due diligence to make sure that the provider understands what they're doing, is compliant, is on top of the regulatory statutes, and it's going to be there and grow with you and provide
Yes.
more features as the opportunity arises.
Brilliant. Well, thank you, Jeanniey. I really appreciate your time and having you today.
Absolutely. Let me know if there's anything else I can share to be helpful. Good luck out there.
Thank you.